The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 27th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's have an extraordinary one. And, of course, the easiest way to do that, well, I guess would be to win that lottery. The second easiest way to do that is to remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. However, what's more important is that I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, any and every and all pings will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade down 148 points. 25,508 is the print. That's down nearly 0.6%. You've got the S&P off nearly 0.8%. That's 22 points. NDX 100 is the, well, not the big loser to the downside. That would be the semiconductor index. That's off 2%. Or 28 points. The transports are up 0.5%. That'd be 53 points the upside. Spot volatility index up, trade out at 1590. I believe that is still below the 50-day exponential moving average out there. So we'll want to watch that. Earlier in the day, it was 16 and change, maybe. But we'll take a look. We'll give you an exact price out here. Gold trading back just slightly. We've switched over to the June contract. We're trading at 13.18 right now. Lead the charge dollar-wise to the upside. It is WellCare. WCG is the ticker symbol up about 23 bucks. Rebonds Holdings up 119%. I don't know what that's about, but up 10 bucks. Chipotle up 9. UniFirst Corp up 7. To the downside, Amazon $28 up 1.5%. You've got Google down $20, 1.75%. So we've got things to look at, of course. I'm going to look at what you want to look at. So the first question comes in from Jay inside the Tiger's Den, and Jay wants to see if there's any profiles or new profile information out here. And there is and there isn't. So here, Jayster, here's the deal. If we take a look at the two right panels of our chart out here, you're going to see the Dow and you're going to see the Russell 2000. Remember yesterday we were taking a look at new profiles that we're trying to form, and I gave you some numbers. Those went away overnight. They weren't present this morning at about 8 or 8:30, but they did pop up here recently. So now we have another new potential profile. Now I'm using my super-duper Doppler radar system in order to generate these profiles. Now, we're taking a look at not my synthetic contracts. These are the actual June contracts out here. But it's a special tool that I'm able to apply that gives me a potential of an advance warning with regard to the profiles that are trying to form out here. So, Jayster, let's take the data we have today. And you've got 1505 and change out there. We'll just use 1505 as support. 1577 is resistance, and 1553 is that point of control, that center of the box, which in proximity to the top is closer than it is to the bottom, meaning we have a bearish structured profile. Really key to watch on the close, 1505, and a little bit of change out there. The Dow equity futures contract also has a new box that is trying to form. We're trading just slightly below the bottom of that, the bottom of which is 25,530. We're trading at 25,527. Yeah, so by, 2 points. Not a big deal out here. But a close below that today would be the first time, if we take a look and just expand out the contract here. Now, again, we're just looking at June, but this would be, since coming off of the lows back in December, this would be the first time we would see or generate a change in trend signal. Now, here's what I don't know. I don't know if this profile is going to take hold or not. So to be safe out here, you'd really want to see a close below 25,341 to give you that confirming change in trend signal for the Dow equity futures contract. The NASDAQ and the ES Mini, no new profiles out here. The NASDAQ has not even been able to get down to test the bottom of its box, that support, 72.44, whereas the ES Mini has tested it, the bottom, that is, the last 2 of 3 trading sessions, and it's still at 2,800. We are trading at 2,800, basically. So that's what you'll want to look at. Those are the new profiles. I've taken off the weekly just so that we can take a look at a relatively clean set of charts with just their daily information. Good? Good? We're good? We're good? We got that? Okay. So and tomorrow, check back with me, and we'll see if these profiles have actually taken hold. Now, what else should we take a look at out here? Well, let's continue. I got another question out here, but let's just continue with the theme of, hey, what are the markets doing out here? And bullish or bearish, right? Isn't that the question? And remember, we're looking at daily charts out here, so different message on a monthly, weekly, shorter-term time frame. But if we do take a look at the New York Stock Exchange, we still have the advanced decline oscillator down below zero. Reading right now minus 61. When you're below zero, it is presumed innocent until guilty. Well, you're guilty here from the standpoint that sellers are the ones that are in control. Now, sellers have been in control of the New York Stock Exchange, in theory, since about February 28th out here. But, and this is where it gets a little dicey, or really dicey, a close above the spot VIX index, that is, a close above the 50-day, 1603 is the exact number out here. It'll change by a penny or two, probably by the close, but 1603 may or may not. We're trading at 1579. A close above the 50-day, combined with the advanced decline oscillator reading being below zero, is when you can really get some carnage. Is the guarantee? No, I can't give you guarantees. But what we can do is we can take a look at chart patterns and say, okay, this is what you would prepare for. But you got to have both those things. You got to have, and really, at this stage of the game, because what you know and I know, what Dave Mason knows, what many people know out here is we're in a consolidation market. And those things are choppy, 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 choppy. And choppy markets are tough. Remember, one day the bulls feel good. That was yesterday. One day the bears feel good. Maybe that was today or earlier this morning out here. We're in a choppy market. So in a choppy market, in order to get a change in trend signal, I think you have to have several things line up. Now, just because I think that doesn't mean that's what it has to be. At a minimum, I think you need 3 things. 3 things. Close below 2,800 on the ES, spot VIX index, above the 50-day exponential moving average, and a New York Stock Exchange advanced decline oscillator below zero. You got those 3 things, can't fault you for taking a short. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we've got a question, two questions, one inside the Tiger's Den. Let's go ahead and take that one first. This is for Peter in Park City. Now, Peter, ask a good question, one that I don't have the answer to, Peter. I wish I did. Which he just asked, does the VIX index, 50-day exponential moving average, which is really the yellow line that is on this chart. And the question is, with this flattening out, which it's really flattened out, so to speak, over the last couple of days. Give you an example. If you look at my data box and we just take a look at the readings, we were at 1609 on March 22nd. We're at 1602 today. So a real flattening. And the question is, does that show a change of trend? And I don't know the answer to that. I don't have a study to let me know if that is the case. What we do know, we've got the S&P 500 and the spot volatility index. So let's spend some time here. One thing that you and I do know, and there's an early warning sign. It's a beautiful warning sign, which is when the S&P 500 is making higher highs, as it has done here recently. What I'm referring to is, in essence, would be starting with the day of March 15th. That would be my starting point. So my little line here is just a tad off. I'll just move it over there. And what we saw take place on March 15th through March 21st was we saw higher highs in the S&P 500, really trying to be denoted, is that a word, by the rising little green diagonal horizontal line, not horizontal, but the diagonal line. And we can see we had a rising, now this is on a closing basis. And I purposely use the spot VIX index on a closing basis, Peter, just because that has more meaning to me than taking a look at the candles. Not that we can't, but this has more meaning only from the standpoint that when we see the S&P 500 moving higher and on a closing basis spot volatility index moving higher, the hair on the back of my neck starts to stand up. Because I know what that means. It doesn't give you the signal as to when something is going to take place, but it typically leads to some type of pullback. It could just be a retracement. It could be something more serious. So that's kind of like the first thing that we know. Here are some prior examples. You can come back to June in 2018. Again, it led to a retracement. We can take a look at it in July of 2018, led to a bit of a retracement out here. We can go back further on the time frame out here when the market made its highs back in January, as an example, of 2018. We had that same pattern. Now, in January 2018, when it was making that pattern, we also can note here that the spot volatility index was closing above the 50-day exponential moving average line, and price kept moving higher out there. And so what we can conclude from this experience here, Peter, is that that was a real warning sign. And then when things finally did fall off the cliff, with the spot volatility index being above its 50-day exponential moving average, and that led to quite a pullback. Everybody remembers that out here. And we can see when this spot volatility index, that's the blue line, is above that 50-day, it really is, if you take a look at the S&P 500, when you can get carnage. And that's why Stevie uses the spot volatility index and its 50-day line to just make a determination of, to use it as liquidity or no liquidity. When it's above that, to me, it's a warning signal that there is a lack of liquidity inside the market. When calling it a fear index, give me I didn't say it, a break out here. You can't trade. It doesn't mean anything. Okay. But it does mean something. We can see here, where it's trading in relationship to the 50-day. Like maybe ultimately the 50. This is from a study that I had done years ago, many years ago. I haven't updated the study to know whether, Peter, it's the 50-day or the 48-day or the 52-day, but statistically, it's if you can go back and you can kind of figure it out. We don't really need to. It works for us, works for me. And so right now, with price trading below the 50-day out here, just means liquidity, still liquidity inside of the market. So I wish I could have answered your question better, better. I can't, but hopefully what I just did share with you is something that you're able to use in your arsenal out there. So okie dokie. So let's go take a look at the next question that came in here. This is from JJ, and James wants to look at Boeing. So the question is, what is Boeing doing? What do you folks think Boeing is doing out here? They're trying to save their behind. There's no doubt about that. And if they're going to save their behind, what they need to do from a price standpoint is stay above 362.90. Jay says going down. Jay, if it closes below 362.90, because it did last week just by a smidgen. Last week's close was 361.52, so probably underneath last week's close. That is 361.52. Got the plane, stop the stock. Ooh, poking the tender underbelly out there. But from a stock standpoint, closing below last week's low, number one, would tell us that the breakout area has failed, which is actually 367.78. But the truth is, when you get a breakout session, here's the daily, James. When you get a breakout session, the question is, where was support really? And the day of the breakout was January 29th. It was really the following day. I'm not going to assume anything. Earnings came out. It was either after the bell on the 29th or before the bell on the 30th. But what we do know is we had wide price spread accelerated volume on 12 million shares to the upside. So that was the breakout. The real breakout for me would have been the session began. It would have began on January 28th. And that's really kind of the low out here. That is another way to say, hey, look, if you get it closed below this level, I'm trying to get it priced for you out here. If you 357.50, that would kind of be my window. 357.50 to 367.78. Close below that and easily could go back down and test the December 26th level out here. So you could easily draw in a potential of an A to B equals CD that would look like this. And the thing is that the B point, the B point does have still volume, 32 million shares out there. But we don't have an A to B equals CD at this stage, but that would take you, just the one-to-one would take you all the way back to the bottom. But right now, support is holding. And so there's, you got buyers dipping their toes in here right now. Whether they're going to get their they're going to be, yeah, you kind of know what I was trying to say, but I didn't say it because it's a family show out here. I can easily make the case here for trying to accumulate some Boeing stock, but you just simply need to have a unconditional money back guarantee, which means that you're going to take your money back if this closes below 357.50 if you were going to do that, because what you'd be looking at that stage is a move back to the at least 316, if not lower than that out there. So James, that's what I see when I take a look at Boeing. I hope that helps you out. Ticker symbol BA. We got a question here from, let me see this. Let me go take a look at this. This is from Joe. So Joe writes in, hello, is $5 a good entry to go long for stock symbol NIO? Let's go take a look at NIO. Hey, Joe, if you can hold on through the break, actually you don't have a choice. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're going to go, Joe is written in, and Joe is a grouper fisherman. And the reason that we know that is because those big groupers, they're down deep at the bottom of the sea. And if we take a look at ticker symbol NIO, which is a Chinese company, electric car company out here, the question was, is $5 a good place to buy? And we're going to say no. It's not. It's trading at 504 right now. Now, here's the deal. With the exception of just a few shareholders, which would be over the since I don't know, some point in time yesterday afternoon. This is a weekly chart, by the way, we're looking at. Nobody here is in the money. Yeah. Yesterday we did the segment "Show Me the Money." And I showed you all the money and where it was trading and moving to, which was here in the United States. Nobody is showing their love here. If anything, yesterday was Joe was another sign of weakness. This thing gapped down with volume. 67 million shares to the downside. So it's below the IPO date of September 12th, 2018 out here, or what appears to be the IPO date out here. If I look at Stevie's, this is the daily chart now that we're at. I'll pull over Stevie's other daily chart just to look for some type of bottoming signal. And in doing this, if we just take a look at most currently where we're at, so when it topped out here, we don't see any significant signs of a top, but we haven't applied our wave tool. So let's go do that. Let's just see. Let's start here from where this morning star, December 25th. So let's start from there. We do our wave count, and voila, where this thing did top out was when it made that 7th wave move, that letter G that is on my screen. So oftentimes when you get to that 7th wave, you just want to get in that hair on the back of your neck, would stand up, just like when you get to the Tommy DeMark set up the 9 count. When you get to count 8, the hair on the back of your neck starts to stand up, because you know that's where a top could form, a change in trend. It could be 8, 9, or the day after 9. In this case here, back in February, it happened to be on the 8 count out there. So now we take a look at the 9 count to the downside, Joe. That was on March 19th. And that was just kind of a hiccup or sideways move. Price went sideways for 3 days, maybe 4 days, and now it's gone back into the toilet out here. So I would prefer that was yesterday the bottom? Maybe, but we're not seeing it. Here, I don't have a pattern to show you. You're down below the last time the bulls tried to show up here, which was on that 9 count. The following day gave you that 3-river morning star. So I just don't, I'm not a soothsayer. I can't read the future. But right now, the future suggests for NIO that it hasn't made a bottom. But if we get the signal, some type of signal that it has, then good. But right now, underneath all profiles, well, really only the daily, because this thing hasn't been around enough, and I just don't see it. So I hope that helps out with regard to what the charts are telling Steve-O-san here right now. No other questions. So now what are we going to do for the next 5 minutes? What are we going to do? Somebody in the den. Just type in something that you want me to go take a look at. That would be beautiful. Somebody might have asked the question, why did the market stop where it did today? Good question. All that I can say is that you and I were just pattern people. We're just pattern people. You know, what happened inside the NQ is it made this little Gartley cell pattern. Did this yesterday. And you can see that's all nicely colored in. Oh, so cool looking. Little bearish reversal signal here at 10:30 yesterday. And from there, it went ahead and made an A to B equals CD to the downside, in between the 1 to 1 and 1 to 1.272. And at this stage here, which was 12:30, and Joe, you'd be looking for something like this too, at least for the bulls to show up, there was a bullish reversal candle. A nice bullish engulfing, completing the A to B equals CD pattern out here. Now, what price is trying to do, and this is a 30-minute time frame chart that we're all looking at, what price is trying to do is to get over and above Stevie's red line, 73.35, 73.36. Use 73.36 as the number. If price gets above that, you should anticipate that price is going to continue to move higher out there. So far, what we've seen here intraday is the completion of an A to B equals CD pattern. The cavalry came in. The bounces ensued. The bounces taking it to where it should take you. If this is just a counter trend move from this morning, price is going to stop basically right here. Based upon the NQ, if you believe that the NQ is the leader, is the dog, the lead dog out there. Well, we don't have to stop there. We've got more And by more, we can go take a look at the 30-minute time frame chart for the ES Mini. In essence, making a similar pattern, but not exactly the same. But what we can see is that the counter-trend rally so far in the ES Mini has run into resistance. PS data resistance, that's at 28.10. Yeah, right into Stevie's red line. That red line is mucho grande importante. Now, I'm sure that's a total butcher, and I apologize, but that's the best that I can do. And you kind of know what I mean out here. The Dow, how about the old Dow? What is it doing on a 30-minute time frame basis? Well, the Dow's trading right now on Stevie's red line. It has shown at the 130 mark a glimmer of hope that it really wants to trade higher out here, but no follow through just yet. Maybe by 2 p.m. there is follow through out there. And let's just go take a look at the Russell 2000. Let's look at its 30-minute time frame chart. Now we'll go take a look at ticker symbol GOLD. The Russell 2000 is saying, you know, not so fast. It did at 130 close above Stevie's red line. Right now it's pulling back and it's testing it. So we've got kind of a conflicted signals between the NQES and now the Dow and the Russell 2000. I hate that, because how do you know who's right and who's wrong in the old liar's poker game? Let's go out to Denver and speak with Ron. Ron, thanks for calling. Thanks for holding. How are you?
Hi, Steve. Appreciate you taking the time. I just want to let you know there's two companies, and I mentioned one a couple days ago, Square, SQ, and also FIVE, are bringing out earnings tonight, and they're supposed to be pretty good earnings according to the analysts. I sold puts that expire Friday on a put spread on both of them, and I also wanted to buy calls, but the calls are so expensive. The only reasonable way is I did a call spread for Friday.
Okay.
I just wondered, it'd be interesting to see how that works out on FIVE and SQ.
Well, so in Square, and I remember we talked about this the other day, and in Square, we were taking a look at how price, I don't remember this yesterday or the day before, how price was pulling back to test the bottom of this bullish structured TAS market profile, and that level was 73.44. Right now, you're trading below that. I don't know where it's going to close at the end of the trading session. 73.44, we're trading at 72.69. Closing below, that's not ideally what you want to see here. But if it closes below that, it says, okay, support has been broken. We haven't seen support broken, in essence, from a bottom of and this is in Square, from the bottom of a market profile since December 4th, 2018. So closing below that is kind of a serious infraction, so to speak. Volume today, 9 million shares versus last time price was down here, 9 million shares. So it's as if sellers are communicating to you that maybe it's not going to respond really good to the news. Stay with me if you would. We'll go ahead and complete this, and then we'll even take a look at 5 for you as well. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're on the phone with Ron in Denver. We're taking a look at Square. And so, Ron, I had mentioned, closing below 73.44, the daily profile would not necessarily be a good thing. It could be a sign of an impending change in trend out here. But then, when I see that, I also want to take a look at what's going on a weekly time frame. And the weekly level of support right now is the top of its profile, which is 71.78. So, the information even that we're getting here is a little bit conflicting. And then lastly, when I go take a look at my other chart here, so first we're just going to look at the charts and then kind of say, how do we summarize this? And so we understand how it made a bottom back here on December 25th, like many of the markets. So this one specifically, a Rhodes momentum indicator signal with price moving lower, doing less relative energy, bullish reversal signal, price trading above Stevie's red line. And then when we start doing our wave count from that low on December the 24th, we can see that where it ran out of energy, kind of running the marathon, so to speak, was when it got to that 7th wave move, which is letter G on my charts. Now, the nice thing is at that stage, price is supposed to pull back, but this has really just been moving sideways with no clear breaks of support. And the level of support that's key on this chart was set up by this Tom DeMark setup 9 count, and that support level has not failed yet, which would be 70.23. So I would say support on this is 70.23 to 71.78 realistically, and 73.44 in there. And I'm not getting a clear signal, not right now. Maybe the end of the day it's a little bit different. How this chart or how traders are kind of playing their hand here to give signals to us. I still have to come back and summarize and say support is basically held on this, and so that's a good thing. But if it breaks, this thing could get down to 59.58, 52.26.
Okay, I'll watch early in the morning.
Yeah.
And can you take a quick look at 5, and what do you think? Earnings coming out tonight on it.
Absolutely. So in the case of 5, what 5 is doing is the daily shows the consolidation, in essence, between support and resistance, which for this equity is between 114 and 119. You're trading right now at and it actually was 119.78. You're trading at 119.87. Almost a dyslexic thing, but it is what it is. So it's trading in essence into resistance. The weekly looks good. It's above the top of its box, and the monthly looks good. So if we take a quick peek here at the daily, FIVE, and I'm also going to put it on the weekly chart. On the daily time frame, I don't see anything bearish about it, so to speak. I don't see anything ultra bullish about it, so to speak, out here. So it almost kind of lines up. Remember, we were looking at the daily chart, and we say it's it's consolidating between an area of price out here. I think that's what I see, on both time frames. On the weekly chart, out here, the one thing that you don't necessarily like about it is this on a weekly basis back in September of 2018 made a high, and as price got back out here on February 15th, it did it with a lower high. And you had two bearish candles 2 weeks in a row. Shooting star, the opposite of a hammer, gets follow through to the downside. So it as I mentioned, it's above the top of the weekly profile. And so that is bullish. But I'm not getting that same confirmation when I take a look at my other chart. The other chart says 123.59 is resistance. Ron, whenever price is below my red/green line specifically says there could be a further retracement in order. But I don't know if that retracement is only back to support at 114.40. So far, that's what we know, and that's the only thing that I would go with. So the earnings come out after the market today or tomorrow morning?
Both of them tonight.
Both of them tonight.
Yes.
I wish for you from a trade standpoint, I could offer you more clear information out here where it just looks like, hey, here's the liar's poker game, but we can go in and we can investigate and see what they've done and just say this is what the probability is.
Yeah. Well, it'll be interesting to see what what effect the earnings have on it.
Yeah.
Appreciate it.
Yeah. All right, Ron, thanks for coming in.
But I did spreads because the premiums are so doggone high.
Yeah, understand.
It's the only way you can bring it down the cost. Okay.
Understood.
Thank you.
Okay, hey, best of luck. Let's see if we've got any other questions out here that may have come in. Let's see here. No, I don't see anything out here. No other requests, so that's good. So we've got about 3 minutes. What do we want to take a look at in 3 minutes? I saw David put something in about Theresa May resign if she doesn't get her way. Was that basically what you're saying there, Polar Bear? She's going to be a screaming Mimi? But let's just go see. Now, I think I've got a 10-minute delay on the currency, 15-minute delay. Let me go to the futures contract. That will be easier because now I don't have a delay, at least on the, whoops, that's not going to help me. Let me come back here and actually put in, I can put in the current contract out here, see what's going on. Pound not responding to that news. Of course, I don't know when it came out, but really not responding to that. So nothing there to really pay attention to or to look at. Okay, so what do we want to look at out here? So somebody put in gold, GOLD, I believe was a ticker symbol. Whoever did that, I apologize for somehow overlooking that, but we're going to get right to it. So let's go take a look at Rand Gold out here. I think that was the request. I hope that was the request. Oh, let's come back here and look at the 3 time frames out here, GOLD, and that is Barrick Gold. It's off of the high, so to speak, but no bearish reversal candle or anything along those lines. Above the daily profile, above the weekly profile, above the monthly profile. Now the month doesn't end for a few days out here, but closing about 1410 for gold. I thought it was Rand Gold, but you said Rand Gold. So is Barrick Gold. In any event, ticker symbol GOLD out here looks pretty bullish as we speak right now at 149. If I look at, pull over my other set of tools out here, what are we seeing? We see an A to B equals CD. Let's see where that price would take us to. The 8-point down here looks like at around January 22nd. December or February 20th looks like, well, it was the B point, looks like March 4th. So it's completed in essence a 1-to-1 A to B equals CD. But John, in the Tiger's Den, look, it depends. If we finish halfway into the bar from yesterday, which in essence is where it is right now, you would get a dark cloud candle, but I don't know where it's going to close out here. A pullback, if this were to pull back, 1364 would be a level of support we would be looking for. That Stevie's green line. 1349 is the top of the daily profile out here. So that's your range for a pullback, 1349 to 1364. I'm not saying that it is going to pull back, but if you do get a dark cloud cover, or bearish reversal candle today, after, in essence, the completion of an A to B equals CD, a retracement would really be its message. Hope that helps you out. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So here's a local message coming in from Paul, just about 12 miles away or so, down in Boca Raton. And Paul wants to, his question is, in essence, should he short C-Trip, CTRP, at 43? It's at 42.76 right now. The high today, 43 even Steven. So if we take a look at C-Trip Communications, I guess, what it did here earlier in the day, and maybe this is why Paul is taking a look at it, is because it tested the high of March 5th, which had 38 million shares on lighter volume, only 5.7 million shares today. But I got to tell you, very risky play at this stage here, Paul, to take the short. You must know something. because the chart patterns, other than testing a swing point on light volume, that in itself is not a reason to go short or go long necessarily, or I'm going to suggest to you it's not a reason to go short or go long, especially because it would force you and I to ignore the sign of strength, and it was a mucho grande. And we're not talking, your coffee or anything like that. Wide price spread, accelerated volume on March 5th. That's the 39.89 million shares that it's testing out here. And certainly no bearish reversal signals or any other signal that this could be forming a top. Well, price is beginning to move higher with less relative energy, but man, oh man, you'd really like to see this thing come up with some type of bearish reversal signal to confirm that. So maybe you're right. I don't see it just yet. I think it's very dangerous when it's so important for you and I to take a look at where is support. And support on this thing, well, it could easily be at 39.28, the bottom of that gap. Or maybe it's the top of the gap, which is 35.44. But I don't see it on the daily. I don't see it on the weekly. And the monthly would say maybe that's short. Maybe that Rhodes momentum indicator signal, Paul, maybe it's going to occur as price gets to around 43.84, give or take. Folks, thanks so much for being here. Hope you enjoyed the show. And stay tuned because you'll enjoy the next hour. I know I'm going to enjoy it. It's my favorite polar bear, David White. Then Tom O'Brien, 3 to 5. And I'll be back with you on Terrific Thursday. Have a great Wednesday.